Welcome to Guardian Capital's market outlook discussion for the month of September 2025. The agenda will be discussing four things. First, education, the thinking framework. Second, earnings. How has the earnings for the BSE 500 companies been for the current quarter? And three, valuation and expectations. In this, we'll be discussing how the market is currently being valued and what's the outlook going forward. And fourth, the sectorial view. Principle 1. Earnings growth determines 80% of returns. If you closely look at the table, we would like you to focus on the red circles where for the past 3 decades BSE Sensex price has grown at a CAGR of 11%, whereas the earnings have grown at a CAGR of 10%. So therefore, we can strongly conclude that there's a high correlation between price growth and earnings growth. Principle 2. Revaluation growth determines 20% of returns. If you look at the example below, Asian Paints over a period of 11 years have delivered a CAGR return of around 13%, of which 80% have come from earnings growth and around 20%, which is 3%, have come from the revaluation growth. What's revaluation growth? In 2014, people were willing to pay 43 times for every 1 rupee earning earned by the company, whereas in 2025, the same people were willing to pay 61 times for every 1 rupee earning earned by the company. In this slide, we would like to highlight the importance of extra return generated. Let's just say you invested 1 crore lump sum at a rate of 11% for 30 years, you would end up with a corpus of 23 crore. However, if you earn 1% extra return, your corpus amount would increase by around 7 crore to 30 crore. And if you generate an additional alpha of 3%, which is around 14%, you would end up with a corpus of 51 crores, which is 122% more than what you would have earned if you invested at the rate of 11%. So this signifies the importance of staying invested for longer periods of time. Now moving on to the second aspect of agenda, the earnings slide. From the table, it is clearly visible that there's been revenue slowdown across market caps for the latest quarter ending June 25. If we look at BSE 500, for the latest quarter, the revenue growth was 4% as against its historical average of 9%, and for large caps, it's around 5% as against its average of 9%. Mid caps about 6% for the current quarter as against 9% for its historical average, and in small caps we've seen the revenue growth has been flat for the quarter. However, on PAT side there's been significant improvement, primarily owing to margin expansion resulting from lower debt levels. Third, valuations and expectations. Historically, companies in BSE 500 have grown at a CAGR of 11%. However, over past couple of quarters, the revenue growth has been slowing down, and for the latest quarter, it was around 4%. And on valuations front, post corrections, there's been a sharp recovery in the market, and currently the market looks expensive, with BSE 500 overvalued by 15%, large caps and mid caps overvalued by 14 and 21%, and small caps and banking and finance overvalued by 11 and 7%. Now the overall outlook going forward, with earnings growth slowing down coupled with high valuations, it would be ideal to wait and watch in the current scenario. And the last aspect of the agenda, sectorial view. Here, if you see, of top 25 sectors of the economy, about 91% of the economy is fairly valued, with only 9% being overvalued on valuations front. And on revenue front, about 22% of the economy is growing faster than its historical growth rate, whereas about 80% of the economy is still lagging its historical growth rates. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.